I, Karishma Suvarnakar, welcome you all on behalf of MI Capital Services to our new series on the UAE Corporate Tax Simplified for You. We bring to you a series of videos simplifying the proposed UAE corporate tax for your better understanding by sharing our insights on the same. Let's start without wasting any time. Today, I will be explaining about taxable persons and basis of taxation. Well, any tax regime has its own definition of taxable person, and so does the UAE corporate tax. Let's define the taxable person one by one. Very first, I would like to draw your attention to natural person. Now, any individual who is engaged in the business will be considered as a taxable person. That is, sole establishments or proprietorships as well as individual partners in an unincorporated partnerships will be considered as a taxable persons. Now, this clarifies that only individuals carrying on business will come under the corporate tax regime. That means employment income and other personal income earned by a UAE resident or foreign individuals such as dividends, rental receipts, interest income and even capital gain will not come under the scope of the proposed corporate tax regime. I would like to elaborate this individual taxation concept with a small example. Suppose Mr. Alex is providing consultancy services from DMCC and has obtained a license for the same from such authority. Now, any income earned by Alex from such consultancy services will be subject to corporate tax. Now, Alex also owns two flats, one of which is rented, and he is earning income from the same. As per the proposed corporate tax regime, such rental income will not be considered as a taxable income, and thus Mr. Alex has no requirement to pay corporate tax on such rental income. Now, moving on to legal person. Any legal person incorporated in the UAE as well as foreign entities that have a permanent establishment in the UAE or that person has a UAE sourced income will be subject to UAE corporate tax on its global income. Now, legal person incorporated in the UAE will automatically be considered as a resident, and worldwide income of such UAE resident will come under the purview of the UAE corporate tax. Though certain income from overseas will be exempt, such as foreign branches and dividends, capital gains or interest, which will be explained separately in the upcoming videos. Now, with this definition of legal person, three concepts are there which I would like to bring your attention on. Number one is a legal person. What is a legal person? Legal person includes LLP, private shareholding companies, public joint stock companies and other entities established under the laws of the UAE corporate tax regime. Now, for this corporate tax regime, legal person incorporated in foreign jurisdiction that are effectively managed and controlled in the UAE will be treated as if they are UAE incorporated entities and thus liable to corporate tax in the UAE. Legal person also includes limited and general partnerships and other unincorporated joint ventures and association of persons which will be treated as transparent for UAE corporate tax purposes. This means that the partnerships will not be taxpayers in their own right as they do not have a separate legal entity, but such income will be a through flow and it will be chargeable in the hands of the members or the partners of such partnership or an association. Next comes the concept of permanent establishment. Now, for non-residents to be subject to UAE corporate tax, taxable income from their permanent establishment in the UAE and UAE sourced income is to be considered. Now, what is permanent establishment? The permanent establishment concept has been designed on the basis of the OECD Model Tax Convention for non-residents. Now, the activity threshold that will trigger the permanent establishment for a foreign company in the UAE will be determined by two main tests. Number one, fixed place of business test. Now, if a foreign company has any place of management, say a branch, an office, even temporary field or an employee office, a factory, a workshop, a real property or any building site, then such structure or space will be considered as a fixed place of business for such foreign company and thus considered as a permanent establishment for such foreign company. Now, if only preparatory or auxiliary activities are undertaken through such fixed place, then also permanent establishment concept will not be applicable. Now, what is meant by preparatory and auxiliary activities? It means limited marketing and promotional activities, performing market research and attending seminars or conventions. The next test is the dependent agent test. If a fixed place of business test is not satisfied, then need to check whether the foreign company falls under this test. Now this dependent agent test will be met where any UAE based person act on behalf of such foreign company in the UAE and has authority to conclude contracts in the name of such foreign company. That means acting on behalf of such foreign company without material intervention from the non-resident company. However, the permanent establishment will not attract where a person carries on a foreign company's business in the UAE in ordinary course of their own business, meaning when the person does not work exclusively for the foreign company and is a complete legally and economically independent from the foreign company. With this, it brings me to our last concept, that is UAE sourced income. Now the UAE corporate tax regime will have specific rules and guidance for the determination whether the income is UAE sourced or not. Till then, as per the general understanding, income will be considered as UAE sourced income if it's earned from the UAE resident person, if the payment is attributed to a permanent establishment in the UAE of such foreign company, if the income is derived from activities or contracts performed in the UAE or from the assets located in the UAE or the rights used for economic purposes in the UAE. The same rules and principles of permanent establishment and UAE sourced income will be applied if a free zone person earns from a source in the mainland UAE. I hope this video has clarified your concepts on taxable persons, residency and non-residency rules. In the next video, I would like to draw your attention to exempt persons, including applicability of corporate tax on prisons. Till then, stay tuned and do like, share and subscribe to our channel to never miss any of our upcoming videos, and for any queries or doubts, do feel free to reach us. Link is shared in the bio. Thank you and keep smiling.